This is really the big day as far as global finance and global economy is concerned, and we at ET Now continue to get you the biggest voices on this. And joining us right here on ET Now at this moment is RBI Governor Raghuram Rajan. Dr. Rajan, thank you very much for being with us. It's only fair to say that this is a defining moment as far as our history is concerned, one that is perhaps going to rechart the course of our history. Many people believe this is the biggest event since World War II. Is that a view you concur with? I know it's a bit of a hyperventilation there, but do you agree with some sort of a comparisons being made?
Well, first, I do think it's a very important event. It's certainly says something about the forces of anti-globalization, anti-unity that are emerging. However, I think the true impact of this event will only be known over time. Clearly, the United Kingdom is now preparing, will now have to prepare to exit the European Union. But whether that will precipitate more exit, whether that in turn will precipitate more anti-trade movements in other countries and the election of anti-trade leaders, and whether that eventually hurts countries that are very dependent on trade across the world, that remains to be seen. And there could be a lot of correction along the way, in which case this would be seen more as a one-off event for the United Kingdom rather than a global event.
And some of that correction will actually be painful, and I'm going to touch upon that in just a bit, Governor. But just till, till Thursday evening, one did think that Britain is eventually going to vote to stay within the Union. It would have gone down to the wire. It would have been a fight to the finish. But do you believe at one level the Brexit vote has taken most people, whether it's in India or overseas, by surprise? Were you taken off guard by the decision of Britain to exit?
No, I think the signs were definitely there for anybody who cared to read them, that there was a lot of anger, that despite so many predictions of doom and gloom on the economic front if they exited, people seem to take those predictions in their stride and move on and say, we really want to determine our own destiny. So there were certainly enough signs there. Now, I think in the last few days, the polls seem to suggest the Remain would have it, and I think the markets got overly enthusiastic about those polls, of course, forgetting to a certain extent the fact that again and again, who actually shows up at the polls matters, and if you can't track that very well, you may be surprised.
Governor Rajan, some sort of semblance did return to markets by the close of trade. There is some amount of sanity that's come in. It's a Friday. We'll perhaps see a different picture on Monday. But I must ask you this at this point in time. It was supposed to be a catastrophic event, and it turned out to be. Most markets and currencies did react very, very sharply to this. My question is, do you believe, given the event that the world has witnessed, we are going to see the risk-off sentiment, the risk aversion, the panic, so to say, here to stay? Do you agree with that assessment that the risk off as far as equities, currencies are concerned, and that sentiment is here to stay right now?
I think we should probably expect that risk-off sentiment to be there for a while. Clearly, of course, risk-off means you take your money off the table, but you have to put it somewhere. So where do you put it? Typically, initially, flight to safety, flight to gold. But over time, you have to redeploy it. And certainly what will be interesting is where investors choose to redeploy as the volatility subsides.
That's a fair assessment indeed, and I'm glad you're being candid in this interview, sir. And of course, Brexit was the big event that the world was watching out for. But Janet Yellen, another central banker in the US Fed, did say I think about 2 days back, she said that Brexit, if it were to happen, would be the worst possibility for the global economy at large. This is perhaps not a Lehman sort of a financial event, but as far as the global economy is concerned, she believes this could have been the worst possibility. I'm not going to talk to you about the other alternative that could have been, but do you concur with her? Do you agree that this is the worst possible event as far as global economy is concerned?
Well, certainly from the global perspective, it would have been far better if the UK had decided to remain. And so, yes, this is a worse alternative from the globe's perspective. However, again, I think there's all too often an easy comparison made, for example, with the Lehman event. I think the Lehman event hit the world when there were a lot of financial institutions that were highly levered with complex assets. And as a result, there was turmoil which spread through financial markets. Here it's more a question of what this means for the long-term value of the asset side. Are we going to see as much in terms of profitability and growth because of the constraints on trade that might emerge if this is carried to its logical conclusion? So given that difference in perception, unless there are players that have taken big positions in foreign exchange or that are highly liquid at this time, and given how well advertised advertised this event has been, that seems somewhat unlikely. Of course, we'll have to deal with it if it actually emerges. But in general, I would think there are differences, large differences between this and what happened with Lehman Brothers.
Fair point indeed, Governor Rajan, but you alluded to the point that the eventuality of the decision will of course be over a period of 2 years. Of course, there is going to be a political change in leadership. I mean, David Cameron has already said he's going to resign. My question is largely on, and Britain will renegotiate its terms of engagement with the European Union, and all of that is going to happen over a 2-year period. It's the uncertainty in between. I mean, yes, the event has happened and it has been catastrophic in that sense, but do you believe the uncertainty in the 2-year period is perhaps something that is going to be of a larger magnitude? Is that something that's worrying you at this point in time, the impending uncertainty as far as the next 2 years are concerned?
Well, uncertainty can play both ways, right? On the one hand, you may get worse outcomes than anticipated. On the other hand, as they realize the magnitude of the event that has been unleashed, perhaps there will be corrective forces. In negotiating to leave, they might decide to do a more contained negotiation rather than a full leaving. Both sides may compromise on that. And similarly, the contagion effects that we're worried about, which are probably as important, may not materialize as countries realize the costs of actually leaving.
The magnitude of the event will perhaps make a lot of people realize that the uncertainty perhaps is a little better off than the event itself. But Dr. Rajan, what we saw today was of course a very catastrophic reaction across the world, what we saw this Friday. But my larger question is, do you believe at one level these were knee-jerk reactions, whether it was the equity action, whether it was the currency carnage, not just in India but around the world, because there was some sort of semblance that was returning to markets. Do you believe at one level this was a knee-jerk reaction? Thank God it's a Friday, because there is going to be a weekend, Saturday, Sunday now to follow, where some of the pain can perhaps be absorbed. And do you expect sanity to return to some of these markets come Monday morning?
See, I'm not a market expert, and I don't know how they will react. I do think that sometimes markets tend to overshoot, but you can see overshooting only after the fact. It's hard to predict it. That said, I think that a certain amount of volatility was, in fact, understandable given where people had predicted, how people had predicted the outcome and what actually happened. Now, going forward, I think we will see this evolve. And I don't think it's a one-off thing. There's a process. And as we've discussed a number of times, there's also the possibility of contagion. Contagion to Europe, contagion to the United States, and then back from there to some of the emerging markets. So we have to watch and see. I think on this front, India is reasonably well placed. It is not as exposed to exports as some other countries are. It's got a strong and a strengthening domestic economy. And with the monsoon looking like it's playing in the way that was anticipated, perhaps that will also strengthen domestic demand. So all this says that in this turbulent world, having a reasonably large continental economy, being able to make for India is probably a good thing and will help protect us against the forces that are emerging.
Strong fundamentals and whether they come to our rescue or not is a question I'm going to follow up in just a bit. But I must ask you a question. In August of 2013, when you did go to the RBI, sleep was difficult to come by with the wild swings that the rupee was making. But you have said today that some amount of movement in currency is perhaps warranted. You are expecting that to happen. At what level of the rupee will you be concerned? At what level of the rupee will it begin to bother you? Because I am given to understand it's not rattling you just yet.
See, as far as the Reserve Bank is concerned, so long as there are orderly adjustments, we don't worry too much. The main thing is that the value of the rupee should be determined by how people think its fundamentals ought to be. And for that, we have to work on the fundamentals. And I've said repeatedly, it means good policies, whether it's policies on facilitating growth through structural reforms, GST, whether it's fiscal rectitude, or whether it's keeping inflation under control. These are the kinds of things that ultimately will define the value of the rupee, and not day-to-day fluctuations or intervention. So my sense is if we've got the fundamentals straight, our only job is to make sure we don't go too haywire every day in the markets, and let the rupee find whatever level it has to.
All right, so the rupee doesn't need too much of intervention by the RBI, but we do know that the RBI is out there in the market to bring out some amount of semblance and sanity to the rupee. But Governor, let me be a contrarian and ask you a question that some experts are voicing, that the rupee was indeed overvalued, correction was warranted. It's the pace of the correction which is a worry. Would you agree that at one level rupee was overvalued, and it's only fair that that correction is happening right now? And one perhaps is that par with that correction happening?
Well, if the rupee was significantly overvalued, you should see substantially more movement in the rupee than in other currencies. I think it's well in the middle of the pack, if not at the more limited movement end. And so I'm not overly worried one way or the other at this point.
All right, not overly worried about the rupee, but what you will be perhaps a part of, at least over the next few months, is going to be a concerted action from central bankers for currency stability. What sort of action are you in fact anticipating, and what sort of action are you really alluding to? Currency stability, a concerted action by central banks, one would want to know what sort of action can that be, beginning from Chicago all the way to China?
No, look, if I gave the impression that we wanted to maintain currencies rock solid against each other, that certainly wasn't what was intended to be taken away. Currencies will adjust, and based on outcomes such as the one today, the UK with a large current account deficit will probably see, as it has seen, a depreciation in the pound. But my greater point was that we shouldn't intervene in a significant way to move the currency in a direction which gives our domestic economy a whole lot of competitiveness relative to other economies. If we all do that, then we end up in competitive devaluation, which becomes problematic for the world. So we have to be careful that we all let the currencies adjust as the markets and fundamentals would dictate they will. And intervene only to reduce volatility, but not in fact to set a direction.
All right, let currency find its own level all across the world. But Governor Rajan, I know I may be a little simplistic in stretching this argument, but one of the things that this Brexit does spur perhaps or constraints is Janet Yellen's elbow room to hike interest rates just yet. Do you believe, like a lot of observers do, that the Fed rate hike is delayed for all practical purposes and in fact pushed away for a while?
Well, to the extent that any event puts a dampener on growth, it is going to make it a little more difficult for any central bank to think about raising interest rates in a hurry. At the same time, however, there are some central banks which are seeing or perceiving the possibility of higher inflation, sometimes as a result of currency depreciation. And so those central banks may be in a different position than central banks that have seen their currency appreciate. Because currency movements also change monetary conditions. So I think it has to be a case-by-case situation. But certainly, if you ask for the one-off effect of such an event, it generally will mean more accommodation for most central banks.
Governor Rajan, I must ask you a question. Is this a lifeline of sorts for India, though? First, of course, the FOMC and the Fed decision being delayed, and the obvious flight of capital that it would have spurred not happening at least for some more time, and we will have those capitals stay intact. And then, of course, crude. I mean, you know, I know it was beginning to worry a lot of people, including the RBI. You had red flagged the inflation issue. That surge is perhaps going to be tempered, and crude will perhaps stay benign for a little longer. So in that sense, it's almost like a God-sent opportunity on both those counts.
Well, if you're asking whether there are silver linings in all this, yes, there probably are. On the one hand, the effect of a slowdown in the UK and perhaps in the euro area as a result may have an adverse effect on our exports. But on the other hand, the boost given to us by a fall in commodity prices, especially oil, offsets that a little bit. In general, I'm of the firm view that adverse events elsewhere in the world don't necessarily help us on net. But in relative terms, yes, we are a largely domestic oriented economy, a lot of domestic consumption, some pickup in domestic investment. So we are a little more immune to outside events than other countries. But I would be far from saying that we are totally immune.
I'm wondering if some people are going to say thank God for being immune this Friday. But Governor, you spoke about the FCNR maturity and you were expecting some big bucks to flow out. Do you believe the Brexit at one level is going to further push up the money that will flow out of India, aggravate the flight of capital really at one level when the FCNR maturity does happen?
No, look, I think that whether it does or not, we are anticipating something like 80% of what was put in will go out. If it becomes 90%, it's actually not that material in terms of the kinds of buffers we have. So I would believe that well managed, and we intend to manage it well, the FCNRB outflows will be a non-event. Of course, we have to take precautions. We are in the process of building up some of the forward positions we had. We are taking delivery on them. And as we build up those forward positions, we will be less reliant on people having to come up with the dollars at the right time. We will already have it, and we can supply them to whoever needs it at that point.
All right, time to switch the discussion away from currency and equities and all the carnage and all of that to something that a lot of people are obviously pointing out, that will Brexit fuel more copycat referendums? Is Denmark going to be out there next? Could Sweden be wanting to opt out next? Do you believe there will be many Me Toos wanting to exit the union now?
Well, look, I think on the one hand, if this has adverse consequences, as many economists, the fund or the Bank of England have predicted, then perhaps it may cause other countries to pause a second and say, well, maybe they're right about the economic consequences, because no referendum is going to be done in the next month or so. It will take some time by which you'll see the initial consequences of this particular action. Having seen that, they might decide other than moving out. Of course, movements within countries may take heart from how successful the Brexit campaign has been and decide that, let's go for it anyway. Let's forget about the economic cost. So it could play both ways. We have to see how it plays out. But my hope is that it's not just the campaigners, but authorities around the world who take note of some of the forces and sentiments that led to this particular vote, and we make adjustments as necessary.
And we do hope authorities around the world pay more heed to people like yourselves, because you don't just talk on economy and finance, your views on everything global matters a lot. I must ask you, at what level are you perturbed by the fear that one is seeing around, the rise in anti-global, the rise in protectionist sentiment? And what ramifications does this have on the impending US elections? Could we actually see Donald Trump being elected the President of the United States eventually?
Well, it certainly could, but I think the point is that we have to acknowledge the costs of globalization, that the costs fall unevenly, even while the benefits are also captured unevenly. On net, there might be strong benefits, as economists have suggested over time, but the cost may fall unevenly, and therefore we have to find mechanisms to alleviate the burden that is imposed on certain segments of society. That certainly is the thinking that has to go on in industrial countries, and certainly even from an emerging market perspective, we have to constantly make the case for more openness, for the fact that it has helped us, and also do the appropriate amounts of for want of a better word, I'll say lobbying, to ensure that the world economy stays open to us as we grow.
All sorts of lobbying as far as the world economy stays open is good lobbying, so to say. But let me ask you a question. Would you have wanted your next generation to inherit a world that's becoming far more inward looking than it has been in the past?
No, it certainly is a worrisome development. But at the same time as the forces are about looking inwards, they're also about talking about independence, not being subject to the constraints imposed by entities that you have no control over. This is part of the message that is coming out from this Brexit vote. So I think what we need to really do is understand this mix of a desire for sovereignty, of recapturing your sovereignty, even while we want countries to participate in the global economy and not erect barriers vis-a-vis one another to trade and capital, as well as human beings. So this really calls for rethinking global governance, something that I've been arguing for again and again, that we've taken it too lightly, and we've shut eyes to the possibilities that the anti-globalization reaction can get powerful and may in fact cause a shrinkage of the space. So we need to really work on this, and I think this is a wake-up call across the world.
We do hope the wake-up call happens, but one final word from you. Is this a problem created by politicians all across the world, and eventually the price is being paid by global economy?
I wouldn't say that. I would say it's actually an awakening of the people to certain costs of technology, of globalization. It's happened before. This is not the last time it will happen. And the real sort of solution is for the political establishment to understand how to deal with it, even while keeping the economic avenues open.
The solution lies with the political establishment, and we do hope they wake up and listen to sane voices like yourselves. But on that note, Governor Rajan, it is an absolute pleasure to be having you right here on ET Now on a big day when news that matters,
Thank you.
Who matters, speak exclusively to the channel that matters. And that is indeed ET Now. Thank you very much, Governor. With that, it's a wrap here on this show. Thank you very much for keeping your time with ET Now. Stay tuned for everything that's breaking in your world right now, news and analysis that we bring to you every minute of the day.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.